Good morning. This is your daily video analysis from CupO'Forex, Wednesday, the 3rd of September. Right now, it's all about the Pacific Rim and the Asian markets. We just had some key data released from China today, as well as from New Zealand, as well as remarks made by the Reserve Bank of Australia. With that said, let's get started. Scrolling on down to our economic calendar. As I mentioned, China just released some key data. Non-manufacturing PMI. Its previous number came in at 54.20, and it just printed at 54.40 today. What do these numbers mean? Because you've been talking about these quite a bit. A number over 50 represents expansion. A number below 50 represents contraction. As you can see here, we beat expectations for 54.20. We came out a little bit higher at 54.40. This is a good sign, as there has been concerns that China, the world's second largest economy, is beginning to slow down quite a bit. Now, right afterwards, New Zealand also released some key data. The gross domestic product for year-on-year. Its previous number for the first quarter came in at 3.5%. We expected their economy to slow down and come in at 3%. We beat the expectations a little bit by coming out at 3.1%. Good news for their export-based economy. What I really want to focus on is the remarks made today by Reserve Bank of Australia's governor, Mr. Glenn Stevens. Now, we all know that Australia has been showing some weakened numbers as of late, and today their economy slowed by 0.5% for the last quarter. Mr. Stevens says that lowering rates any further, if you recall, they left interest rates where they have been for the last year at 2.5%, which is a record low. If they lower rates any further, it is not good for their robust housing market. He feels by lowering rates will cause the bubble in their housing market to inflate even further. So he's going to leave interest rates as is. This was not a good piece of news for Forex investors. And we're going to now jump into our technical analysis and look at the Australian dollar as well as some other currencies and equities markets. Okay, let's get started with our technical analysis. Right off the bat, I want to take a look at the Aussie dollar, which has been falling off quite a bit as of late. As you can see here, we did have a bearish candlestick form here, and then it fell off quite a bit. This is what the Reserve Bank of Australia wants. Right now, we are just above a key support level of 97.70. We're trading at 92.760. Right below that, there's a minor support level of 92.70, 58, 59, right in this area here, which we should watch. If that breaks, we will touch that key level 0.970. And this is what the Reserve Bank of Australia wants. They want a weak Aussie dollar. Just a next support target below that is 0.9240. Near-term resistance still remains at 93.10. Just above the round level 93, which is in this area here. I want to take a look real quick at the Aussie yen. The Reserve Bank of Australia, as well as their governor, Mr. Glenn Stevens, have been making a lot of noise that they're not happy with the strength of the Aussie dollar. This chart paints that picture very clear. As you can see, the Aussie dollar has been steadily increasing against the yen. Now, Australia is an exporting nation. They rely on a weakened currency to help grow their economy. We are well above a key round level of 97 and now probing a minor resistance level of 97.60. The Reserve Bank of Australia has been making a lot of comments lately that the Australian dollar remains overvalued and they're not happy. They're trying to jawbone the Australian dollar lower. We do see a possible start of a bearish candlestick here. That's what we're going to be watching a little bit closely today. Next, I'd like to take a look at the Frankfurt DAX index, German's benchmark. Where are we right now? We are just above a key technical support at 9,500, as well as a minor support at 9,505. Right now, we are trading just above that level at 9,507.02. With all the data coming in and out, coming out of the European Union as well as Germany, that the German economy is possibly slowing down. We've been seeing quite a bit of volatility in this market. We need to stay above 9,500 to touch a next key technical level of 9,550. Break above 9,550, we'll touch 9,600, which you can see is the short-term top right in this area here. I also want to take a look today at the euro dollar again. It's a very fascinating phenomenon we are seeing here. The euro has been weakening considerably, been falling through supports like supports are going out of style. Thankfully, it looks like we might be hitting a bit of a bottom here, just above the key level of 1.31. We seem to have bottomed out and are doing a little bit of a consolidation range trade pattern. This could be a good sign. In any event, I wouldn't get too happy in this market because we are extremely weak. The euro looks extremely bearish still. We need to reverse back above the key level of 1.31500 to really indicate that there is a bottom in place and to recover. For right now, look for a little bit of range trade above the 1.31 key technical level. A break below 1.31 opens up 1.2950 and 1.290. We're going to be watching this market very closely. Alright, this concludes today's video analysis. Thank you for watching, and we will see you tomorrow. Have a wonderful day trading.